Good afternoon, all. This is Fadi Hamzi. It's about 4:34 p.m. It's Thursday, October 13th, 2022. Sorry about moving things around. If you actually go to our members page where we post these things, it still shows 5 today. We've had some technical issues. The problem is that because we push everything. When you're flying at the edge of the envelope, you know, one loose screw causes a lot of problems. Anyhow, Big Machine is down until about maybe 5-10 minutes ago, but it's all stripped out software wise. You have to rebuild it for tomorrow. My protocol says that machine has to fly. Code name is Spirit of Cape Naples after B2 bomber nomenclature. It's an i9 and it's a double overclocked. So that's why it needs cooling and all that. When you're doing multiple segregated accounts, that's the only way to survive. You just can't do it on a single PC. And we're also running a couple of new algos on that for after hours. ORB is doing very well. ORB did today. I think we probably posted here. Let's see. You saw what he did. What we posted here. I killed it. Absolutely killed it. Right here. There we go. You go there. You'll see it did 1783 or something like that. Is that 1753? 1753, yeah. And here's the chart. Took the early profit. Everything goes to BE, so it cannot lose, and then runs. End of it, EOS, end of session, took 2 out. 1 early profit. Why not all 3? Hey, it's easy to say it now, Murray. Okay? It's issues live when it's coming to you. It took the early profit, brought the BE, brought the exits to BE, so we cannot lose. And then we had no exit targets. It just kept on going. So we're not going to get out. And then EOS is 12:15 Eastern. Took it out. And then that's, you see that for 3 MNQ margin at 12:39, it made 1753. That's 141% in 2.5 hours. Welcome to America. Yeah, it's just been killing it. What did I say to you guys? If it moves, this machine takes it. If it doesn't, nobody's going to make money as a day trader. We're going sideways. Remember, we're not selling futures. It's not a time decay. It's a future. It's got to move. So, yeah, it was a great day. All right. We will posting that. As always, it's posted here. There's a link there. We've shared that link. And you see, and we're going to add one more item here. This max drawdown formula was wrong. Okay, I understood. Okay, they're going by the book, fine. But we're going to add one more line underneath it tonight, which is what do you call it? Capital drawdown. Okay, not max DD, but capital. Did we or paid capital drawdown? Did we go below what we put in? In this case, it was 0. On MNQ, only made money because what? It was a big day, first day. Build a cushion, move forward. On NQ, remember, same count. We saw a little later, and then of course, July was difficult for everybody. So the drawdown was bigger. That was a drawdown. We'll add that too. We actually, from the capital, we lost 10,000, but from the peak was 26. The fellow who found it is right. I'm not going to argue with him. Okay. I didn't like the way he answered me, but that's okay. That's okay. I'm not here to piss around with the retail. It's okay. More power to him. But he was saying it's impossible. It's not impossible. That's okay. That's okay. As Steve Chauvin, the great Steve Chauvin, once taught me, was we're dealing with possibilities and probabilities. Nothing is impossible and nothing is certain. Once you get that out of your head, you're a better trader. So those will go up. Oh, we'll be adding a special feature for those who buy X level and up, and we throw in another package, like a bundle. Bundling with the floor. Flow? Who's a gallon progressive? We're going to do a bundling like progressive for you. Has to do with our happy package, our indicator. Why? I think we're having questions from people, and if they're doing the Rolls Royce of the packages, why not throw them in a good version of the happy for the usage? So, I mean, for not forever, but let's say 6 months or a year, something extended time, as long as the subscription is kept up, obviously. But we're going to try to do that. But that's the weekend. I have no time for it right now. I got to get my B2 bomber ready for tomorrow. Look at that baby. Look at that baby. Just amazing. Yeah. Two pilots. I'm sorry, one pilot. Left is a command pilot. Right is weapon officer. Yeah, incredible. I had the privilege of working for the chief design, original chief designer, the first one. Yeah, Mo Hesse, German guy, very smart, extremely German. I mean, smart, extremely German. Yeah. So, and once he knew my headmaster in Tehran was raised in Germany during the war, I was one of his favorite assistants. So, yeah, I learned a lot from him. Anyhow, long story short, let's get over here. Econ calendar. Now we were all hands on at 8:30 this morning with the econ calendar. I had a couple of calls last night. What do you think it's going to be? What should be my buy and sell levels? What's my matrix, decision matrix and so forth? And I told them I don't know. What do you mean you don't know? I said, listen, I don't sit here think about that. Yes, I'll click here and see what CPI is going to do. So my eyes are fresh with some data. Right over here. And so I'm not coming in. Remember, kind of. Oh, that's a 6 months. Beautiful. What is going on with the mouse here? Do we have the? No, we don't. I'm sorry. I've noticed with some thumb drives, if they're on your machine, the mouse behaves unusually, erratically. Hold on, right. Okay. There we go. So let's go to CPI right there. Okay. By the way, we don't edit these out. You're gonna see what we do live. Okay. I noticed a little delay. That's a lot of people probably taking a look at it. But I usually take a look at it early, maybe the night before, early in the morning. When I come in at 7:30, I try to go through this immediately. Today was 8. I ran a little bit late because I was up last night with this problem here. And obviously the actual is not there. It gets updated. So we came higher, but remember, there's a whole consensus out there that PPI is soft. And so this is a delayed, it's a lagging indicator, CPI. CPI is retail. CPI has been pushed to you by producers. But if the producers see some softness, and again, go to LinkedIn, you want to you're going to follow, what do you call it? Hold on. You want to follow Jeff DeGraff. He wrote the first chapter of my book. There you go, this guy. You want to follow this guy, okay? One of the greatest technicians I know. He was a protege of Steve Shulman, my mentor. And he had early on told me, he says, if anybody could one day fill my shoes, it's going to be this guy. And follow what he said. 2 weeks ago, he had a discussion right after PPI, I think a couple of days after last PPI, not this one, not yesterday, but I guess maybe 4 weeks ago. He gave a warning saying, we're going to get oversold. People are going to go crazy on this stuff, but they don't realize PPI is warning the inflation is behind us. And so now the other problem we had is what Nancy wrote to all of you guys on the option side. She said the following. As of yesterday morning, 3 days, BOJ, Bank of Japan, cannot sell any bonds. That's what we call liquidity crisis. And I asked her, what's your opinion? What do you think here? And she goes, well, probably they don't believe the government. I said, well, should they believe the British government, new prime minister, new king, and the whole country in a mess? She goes, no, I guess I got to add that in. I said, I would. I think, yeah, we're in the same boat to a different degree. Of course, the whole thing in Europe is also what Comrade Putin is doing. But yeah, put that in there too. And so we selectively, we had some stuff that was really, really out of whack. We were doing very, very well here. Okay? But then this was that Friday that killed everything. So we said, you know what? One cycle is not going to kill us. Take the loss, get out of here, let's go. We did that. That was a little bit yesterday, but we had to be cautious. This came very soft, as I said in the morning. This guy be inside day. It was. And of course, this number was actually hotter than expected. I mean, we were expecting a market drop first. So let's go back to this and look at how today, this is CPI, yeah. It came in harder. But the market was so oversold and you had so many shorts, And so what happened today, in my opinion, as I talked to a couple of larger traders, they were inverted. That is, they came in thinking that we could go up. The number hits them. They reverse and go short, but they're going in late because they went at their max pain. They came in at max pain, gets inverted. Look at it be pre-open. This is cash. Remember sigma level? Murray, are you seeing the sigma level? It's -2 on bounces. Pretty strong, takes everything out and goes back up. So by the time we get to early part of the open, these guys are short now. They came in long, CPI hits them, they get short, and then near the bottom. And then rallies up. That's a double whammy. So we got people out there that are, I mean, I'm not going to talk numbers, it's not correct. But I mean, one of them said what had gone against him, and I told him, I said, he goes, I don't know if I'm going to be at my job Monday. I said, I don't, that may be a safe expectation, and I said, I don't blame your boss if he fires you. When you trade for professional money, you can't have these mistakes. It's bye-bye. So when you trade for yourself, you can do whatever you want because you only have to answer yourself. And you can actually be a little bit wider in your range. And there's nothing wrong with that. If your sister can handle it, you don't come up with ulcers and you don't lose half of your hair and you don't lose sleep for several weeks, that's fine. But when you work with somebody else and you're running somebody else's money, you got a lot of limitations. You just can't go there. And this guy, his fear is, and he was short part of a year. His fear was today telling me, "Oh, there goes my bonus." I said, "Yeah, probably. If they lay you off Monday, you're not getting a bonus. You're done." So, and we'll see. I mean, the damage he had done to his portion of the fund was heavy. So it was a tough day, no question. But we never said it's going to be easy. Why? Seasonality. September, October, November are the toughest. It's not for everybody. I tell some people to stay aside. I have a number of affiliates that some of them took some money in recently, and we bought a little bit actually today. We bought a little bit 2 days ago. Yesterday was kind of calm watching it, and one of them I said I'm not going to buy you anymore because the way she had reacted from the first cycle. And but you know the names, Nvidia, Boeing, Tesla, and that sort of thing. Mainly because either you're a big boy or you're not. Not interested to, I'm not going to babysit you. And most of you were not born with the silver spoon in your mouth like George W. So either you can handle it, or like me early on, many years ago, I had to grow up to handle it. I had one day in LA. When I lived in LA, I went and sat. I lived off of Olympic in Beverly Hills. I drove to the beach, went up north. First major street is Wilshire. Went there as a big park on the cliff. I sat there like Maharishi. I sat there about 2 days. Yes, I go home for again. I went home, came back next day. I got completely frozen. Why? I had a boo-boo. And the boo-boo wasn't small. It was a big boo-boo. So that was the tuition. And I paid personally. I paid some of my clients did. A couple of clients were positive, but they had a drawdown from the peak, and they said, "What do we do?" I said, "Close it." They said, "What?" I said, "Close it, close it. I'm going to close everything." If you have a profit, you're lucky. You kept your profit, but some of you guys didn't. But you got to understand, me going forward is probably not advisable right now. I'm going to take so much time off. So I took probably about, I don't remember, probably 4-5 weeks off because I've never had a loss that big. It just happened all within a period of about, remember, this is bond futures, U.S. bond futures, 100 to 1 leverage, 100 to 1, not the index. The index is 49 to 2. 49 to 1. That was 100 to 1, so double the leverage. It was about 36 hours. Middle of the week. It was just bad. So I had all kinds of issues. Not mentally, physically. They're stressed. They're adrenaline rush. So I took about 4 or 5 weeks off. Yeah. Went to gym after the first week every day, and running and sauna and this and that, just to flush myself out. And slowly I crawled back. I trade bond one more time, one period of time after that, and then I said this is way too much for me. I'm having some luck, but I'm so extra cautious. That's not you how you trade. You can't be in that mode. You're just setting yourself up. So I switched to ES, and back then ES was pretty tame, $500 for $1, but your total range for the day was like $6. So you could lose 3 grand. Now you can lose 3 grand before a rabbit gets pregnant, as we say on Goldman's trading desk. So that's where that is. Retail sales tomorrow are going to be important. Remember, it's a red dot. By the way, someone was asking, where do we look at? Feed this, guys. Use this guy. This feeds everything, including MarketWatch. MarketWatch gets it from here too. By the way, I didn't know if you know or not, but MarketWatch also gets our PMT package. So, what was this, Dennis? What's good? Which one? This about the rabbit? Yeah, that's that's the scale. Yeah, that's the scale. Yeah. How fast the rabbit gets pregnant? Yeah, that's the scale. Yeah, that's your benchmark exactly. Yeah. Anyhow, take a look at. Let's look at this retail sales. Now, go back also on last Friday when we had the non-farm. Go to BLS and see what the retail employment did. Don't forget. Okay, point 3, the consensus point 2, range is negative. Watch out this one. Now, if this thing comes negative tomorrow, bye-bye, Jerry. Jerry Powell, bye-bye. You can't do much. Here's the other problem. The fact we have the liquidity issue. Last thing Jerry needs to do right now, go into election and tighten up, and then we go to a credit freeze, i.e. 2008, i.e. March of 2020. Nobody's going to do that. So is politics involved? You bet you. What do you think? Don't be so naive. It's Washington. So the pressure on him would be to get this right. The problem is the rear view mirror. He's seeing the past. If he doesn't get it right, and then number comes and shows that he was again behind the curve, I don't think he's going to be renominated. And this is, remember, you can't do anything. He'll be on board. He'll be on the board of governors. They can't take him out for 10 years, but he won't be a chairman. Chairman has to be appointed, I think, twice max. But the issue with all these guys is their legacy. Nobody wants to go out in a situation like that. Nobody. So we'll see. He did a great job in 2020, in my opinion, on March 23rd, 2020. But you got to realize something. He created some of this inflation we have right now. No, not here. Hold on. Let's go to SB1. There we go. That on that day, let's see, right there. That's beginning of March 23rd. Spring equinox we talked about, 18,000 on the Dow equivalent. He flushed it with not the bazookas or anything. I call it depleted uranium on an M1 tank. That's what he hit it with. And remember, that opened, that was that part of that week. This part was 3,000 points on the Dow that day. I remember that. I had it was a tough week, but then we were short. The issue is, do we cover? And I thought the Sunday night before we should. Long story short, he came and changed the ball game. Why? False size. The Fed can do it. Yeah, listen, they're the biggest hedge fund. Yeah. And their business is this. These guys. They're pollution in all of these. And it's a Ponzi scheme. They borrow from me to pay you. Because my economy is not making money. I mean, the budget is not. Last time budget anything at surplus was, I think, 1999, and only for like 3 or 4 quarters, maybe 1 year. I don't know. It's not. It wasn't obviously not a calendar quarter. Calendar year, but more of a. It was a spread in that period, and part of it was also fraud. There's a lot of fraud in the stocks. Remember, who was it? Bernie, not Madoff. Was it Bernie something? The guy with the WorldCom and all that. These guys and all the .coms that were wrong, Adelphia and all that, and that's what happened. You saw in 2001 when everything collapsed and they did the test. That's why we have not Dodd-Frank. What is it? No, we got who was that guy on Connecticut? Dennis, you would know. Who was the senator in Connecticut back then? Not Dodd. No, it's another guy. I forget. No, not Lieberman. He is not that smart. Hold on. No. It was a Democrat. It was a Democrat guy. Not that I'm saying he was smart either. No, it was a one Democrat, one Republican. Not Dodd Frank. Oh, maybe it wasn't Connecticut. Sorry, Oxley, something Oxley. That came in post 2001. That whole protocol came in. Something Oxley. Remember? Because there was so much fraud, and they were paying with inflated. They were paying the taxes with. Yeah. No, Sorby Oxley. No, something else. Oxley. Yeah, you're close. I think that you're close, but the spelling is off. Yeah, it's something Oxley. Yeah. For the accounting stuff, correct. Because of accounting the fictitious gains, Bernie Evers, WorldCom, right. And the Delphi, a bunch of other ones. So when the accounting came, they tightened up on the accounting. A lot of games went off, but something Oxley. Anyhow, I'll look it up while we're chatting there. But remember, when that came in, it cleansed the system. But because of high taxes, Clinton claimed that we paid the we made money and the system made the what do you call it? We balanced the budget. That was the only time. But the only thing collapsed later when they found all of this was almost like a Ponzi scheme. It wasn't there. I forgot something honestly. Anyhow, it doesn't matter. But you know what I'm talking about. You can Google that. Anyhow, so I don't think these guys want to be in that spot. Today was oversold, but it's not cheap, guys. Look at the treasury, 91 day, 3.5. This is going to hit cars. This is the highest interest rate in 5 years. That's a 5-year high. That's carrying it. That golden rod. This is the 5-year for the 10. This is going to impact real estate. We've been saying that. I mean, I got a friend who just built a bunch of condos in Marco Island. I told him, Sarbanes-Oxley. That's it, Sarbanes. Was he from Connecticut too? What was he? Oh, Maryland. He's from Maryland, right? I forget who was he from. Somewhere on the East Coast, yeah. You got it, my friend. That's it. Thanks to this. And here's the here's the real estate, and this is the life insurance. I told him be careful last year, and he gives an answer back like, of course he's a big guy, no question. If you look at his, go to his house on the water, the boat and everything, he's a big guy. He goes, well, I've been in this business 45 years. How long you been in real estate? I said I left 2006. I sold my last parcel in Beverly Hills 2006 because I was afraid of what's going to happen in 2007. Well, what do you think is going to happen? I said, I just, my feeling was the mortgages were being manipulated, especially on the ones with the adjustables. Nobody back then called it subprime. They didn't want to use that language. I knew something before facts. No, it was after fact. And enough is enough. I had a place on Robertson and Olympic. I cashed out. Plus, I was in a divorce. We had to cash out anyway. It all happened to be a right spot. And the money went to a lot of it to this, to build a website. So I kind of swapped. I went from real estate to a website. And that was the time actually, some programming was needed. And long story short, I don't want to talk to him right now. You know what's left of these stuff at the beginning on the water? I mean, devastated. Of course, there was no direct hit on Marco like it was on Irma. But I almost 2 months ago, I almost moved to Captiva. If I'd done that, there was nothing here. Gone. All these computers, everything's gone. We have backups everywhere on the cloud and all that, but all the hardware, boom, gone. So I'm going to move shortly, but I'm not going to do it down. I'm going to do it here. I'm going to go inland. I'm done with near the water. Yeah. Why? Global warming. Go to NOAA. NOAA, look at the data on the water. Just weather, water temperature, nothing else. You don't need to know any data science from weather and all that. No PhD in astrophysics. You don't need a computer. Just look at the data. Data doesn't lie. Politicians do. Go to NOAA, read the data for the Gulf. It's just going to be more and more intensive. So the sad part is this project he's building in Marco is probably going to be worthless pretty soon. And the hit must have been very heavy. Yeah. And people are scared. People are scared. As I said last time, a friend of mine in the Collier Bay garage, rolls and a Lambo in mud. In mud. The mud was up to the window level. Bye bye, Lambo. Yeah. I don't know if the insurance will cover it or not. Honestly, I have flood insurance for the car. Okay? For flood insurance for personal property. The problem is, what do you call it? It's act of God. Otherwise, an insurance company would like to get out. This is going to be a biggest hit ever on insurance as the event in the U.S. Will make what do you call it? Because of cost place, replacement cost. It makes it Katrina like a kids play. So, and it's going to put pressure on everything. So we'll see. I mean, look at what's going on with Canada on both labor and real estate. We're getting to a perfect storm here. Scary, but we shall see. To me, this is because we're so strong. It's a classical bear market rally. Why? Where's my capitulation? I need volume. I don't see it. So the baby is with mommy with the bathwater. That's not the deal. And capitulation, baby is flying out of 10th floor with the bathwater. And mommy says, oh my God, we're not there yet. So, bundle up and tighten up and be ready. All right. Good move here on the Russell. Good move on the trans. By the way, I got to rush this a little bit. So no questions until I'm done here because I got to get back to my technical issue. I had a choice, either cancel it or do this. I thought I'll do that. Now, I was hesitant. I said in the room too. Because we had a good day, I'm long. I don't want to go there, show off. So I'm not going to talk about much about it. I said, here's the chart. The problem is where we're heading. It's not what happened. What you see on the chart is a rear view mirror anyway. So it's history. It's already happened. Okay, let's look at some indicators, see what they will tell us, if any. By the way, I took some of I should do more. These watermarks are much easier to look at charts. It's just too much. Okay, system looked like it wanted to go short last night and got whacked. We're still buy on the long term. And this is 200 week. Very important. Very important. Look how long we were below it before. About 3 weeks total. We drop on 1 week. We close at 1. Drop below it. Reversed up and took us another week to mop up and get up over it. So here we've been at it. 3rd week now. All right. Look what happened here. 171, Jack. This is a reversal in the day. Big, high reading. I look at 140 and above. Right there, almost that. Remember last time I was a little bit hesitant. 140 and above historically is what you want to look at for new lows. 52 weeks new lows. How do I come up with it? Empirical observation. Very smart. Yeah. No math. It's just the fact is, as they say, correlations in the markets work until they don't. So, Momo. Pull back up. It looked horrible yesterday. Look back up. Still we're in a, if you want to think of it this way, we're still in a bullish divergence. I'm not convinced yet. I'm from Missouri. I got 19 babies there. I said that to a blonde at Mercado. She goes, are you some of these deadbeat dads that you run down here? She never do the math. How can you have 19 babies? I said, I have 19 of them in, what do you call it, in Missouri. So, show me. I'm a show me state. Of course, she didn't know I was talking about B2 bomber. But. Okay, this is a bad take. We got to report this again. Oh boy, there's no way this would trade down here. I don't care what they do. It's almost 4.5 sigma on the VXM. Obviously, we're heading up, but probably we're done. Hold on. Lower low in the pricing, lower low. Okay, but not a higher high on the volatility. So this is a very strong divergence, by the way. This doesn't happen much, but you're seeing that. This one I don't know. I need to have this thing cleaned up, but also it looks like it just followed it. So signal is on the SPX anyway. I had a conversation last night with a friend of mine. Kept on saying about Nasdaq. I said Nasdaq doesn't matter. Yes, it's technology. It leads, but this is 80% of U.S. equities. This This is the market, not the Dow, not NASDAQ, not NASDAQ 100. This is it because it's market cap adjusted at 80% of US equities. So I see a divergence here, lower in the VIX versus a lower price. It should be higher. So that's the divergence. It should be like this. But obviously, it's got a tea leaves I'm reading. Okay. SQ. Where are these people? That's my point. Why are they? Why are they're not buying out of money puts here? It's a tail risk, right? As SQ is. Only a downside. Remember, we have two tails. It's a tail risk. Oh, I'm gonna miss this guy down here. Okay. He's from New Jersey. Yeah, good guy. Yeah. He's a good father. He's good. Has a good father. He's a good father. Baseball. Yeah. Okay. Treasuries. We talked about that. This is liquidity issues up front between banks. I hope they start giving us a 2-year index. We don't have it. Next time I talk to product design over at SIBO, there's a fellow I got to talk to. There's also a guy who chooses to invite Admiral Esco over there too. Where's your 2-year? They have 2-year futures, but not 2-year index. Remember, this is YTM, yield to maturity. Cars, homes, life insurance, long term. So, yeah, all right. Oh, by the way, another notice for you, everybody. We are beginning to upgrade our software on Happy for low overhead usage. We just kind of put it together, it worked, but now we're using it so much, so many screens, and there are efficiency things there. There's a, if I go here, for example, let's see. If I go to view, I'll show you what to do. Go to application bar, show all. You hit settings. You see this easy language utilization monitor. This tells you what you're using of all the stuff that's running on. So you got to parse it by page and all that, but you could see what they're doing. Obviously, our CI/CD diff use a lot of CPU relatively, and I think we have a way to reduce it. We just did on our system. ORB now uses 70% less modules. Therefore, the interaction between them is a lot lower and more efficient. And we can activate somebody with instant. We had 2 people join today. It took me about 45 seconds each one to activate. Yeah. We're going to be doing next, we're going to come back and do the indicator. CI/CD diff, Sigma channels, DMZ diff, and then comes the proprietary ones. Why? It's the bandwidth. We have too much activity coming in. Hi, Steve. How are you? We have too much bandwidth coming in on the dome. If your CPU is behind, you're not going to capture the full picture. Okay, and you're going to get errors, and updated data is not available until end of business day from the exchanges. So you're on your own during the day, and so we need to do a better job there. Part of it is that I didn't know better. I'll take the blame. I did. With the program, the system program I'm working with, I've done API for ORB. He came up with a way to lower our CPU by simply looking at the code and doing it better. That's what we're going to do with this. With our Happy. We're also going to bundle Happy with the high end of the what do you call it? Our ORB package for like 6 months as a gift for signing up, and then of course we're always open for somebody who wants to give a simple trial. Send us an email. I want to try it. Happy. Remember, we're going to be using your trade stations. You need trade station. No, we're not going to port it to some other BAWA platforms like TradeView or TOS and all that because they're not trade station. Why do you want to? If you have a choice to drive a Rolls Royce, why do you want to get on a Volkswagen? So we'll be doing that. But it's going to take me time. I'm going to think about it over the weekend. We'll send you what we have. Of course, as we finish the speed up version, we'll write over it and update it. We're not going to stop. We're not going to wait for that. I'm not going to dangle a carrot in front of you. We're going to give you what we have. Going to improve it as we move forward. Right now, if you're buying a new machine, I hardly suggest you do i7 12700 series. That's what I would suggest you do. If or get i9. The problem with i9 is parts are hard to come by, price is high, and there's any repair, you're going to be on a backlog. Right now, they're quoting 90 days on some machines. So, hi Stacy, how are you? Hi Thomas, how are you, sir? Welcome. Let's see, did I miss anybody? Charles was here. Hey Jason. So that's what. Hi Michael. So that's where we are. Okay. Sorry guys, this is being recorded, but I've got system issues. I've got to get to them. I think I missed train station, but I can at this level I can go to a couple of people I know that can help me if there is still a problem. Stock RSI code is available on the what's his name? Tushar Chandley's book. If you can find the book is long oversold, but you may probably find some book on some of it on Amazon. It is on our recommended reading list. No, I'm not a professor, but I like to share so that I have less phone calls. Yeah, my problem is time. I'm time bankrupt. But go here, and we don't get paid. There's no involvement. We have no interest there. Right there, suggested reading, just like a professor comes in, gives you a syllabus. Obviously, yeah, mine is up, but don't worry about that. You're not gonna learn much there. But on the technical analysis, Tushar Chandy. If you can find this book, get it. Okay. Of course, this is a classical one, Edward McGee. Okay. Martin Pring is very good too. This is a very good book too. Yeah. Actually, he asked me something the other day. They're up here. They're in Tampa. I think north of Tampa. But hold on 1 second. Some machines are backing up. Give me a second. I'll tell you, if I had moved to Captiva, I was history. Yeah. It's not the code, but you gotta get all this hardware together, all the wiring. You know what kind of wiring? How much wiring I have here? Those are back. Yeah. So anyhow. So rendezvous point done. Right. 1, 2, it's pulling up. Now we're getting to another rendezvous point on the third one. Should we go up there? I don't know. We'll see how things are tomorrow. Retail sales better not be drastically lower. As long as they're somewhat in line and soft, I'm okay. But if they are deeply down, oh well, there we go again. Now roller coaster. Now, why do we need that? Sometimes it's not bad. To flush out the weak hands. Yeah, I mean, forget those who give up on the futures. I'm talking about cash. Those who cannot hold the cash. That's a good sign that hey, we're getting near the bottom. So, all right, we went to +1 almost on the 3-month spread of the VIX. Okay, we're long. We're still we're trading that. We're long up. October short. That's January. Short January. So it came back down because dramatic move intraday, and I covered my long a little bit faster in the room because it was just too good at the time. But of course, I left another double of what I made almost. Yeah, 8. What's that? 4? Yeah, 4. That's 5. Yeah, it's actually a little bit more than that. I left more than double of what I made on the table. Nobody knew it was going to go like this, and it took him a couple of hours before he get a second wind, and then went up. But and you see the reflex in the spread. Okay. Down below it said high. Up here it's the low. Why? It's the inverse asset. Think of it that way. It's involved as the inverse asset, so that makes sense. It's inverted. So, and then you want to ask me about SP2? I know my most cherished indicator, because for the longest time it just worked like a charm. We have another Bush Derivatives, and now another one on top of that. It's called Murray and Murray. One Murray here, one Murray there. That's Murray and Murray. Okay, so good. And look at this poor island up there. So up and down volume quickly. Okay. Now there was a whole controversy on Twitter today about these numbers don't work. I told you so. They stop working soon. I don't understand it. Like, listen, when we post these, there's all of them, at least I do in my post. I'm sorry, I stand corrected. Admiral Tico is just looking at me like, Daddy, that's my post. He's right. He's right. Yeah, as you know, Admiral Tico is very good with Larry's setup. So if you follow Admiral Tico, you'll see what he does right there. Of course, he Admiral Tico. Oh, that's not final. 2 hours ago, can't be. That was local. No. I'm sorry, that should say current. That's not final. I'll post one and then I clean it. Yeah. Okay. So I'll read this. Absolutely read this, and it will put you to sleep. Yeah, that's guaranteed. But we're hosting it on our website so people can get a chance and go read it and lower the questions. Remember, it's probabilities and possibilities and probabilities. It's not certain, but you could see the thing. The part I have a problem with is what's called the FTD, follow through day. That's because haven't spent enough time on the work of Bill O'Neill, what they've done with cancel it, follow through day. But obviously, this was remarkable, and part of this was just the sheer size of the shortness that was in the hand of people. So we hit the signal level, and here we are. But we failed to get over 90%. Yeah, so I think there's more bumpy road ahead of us. And again, this is cash. Buying power, that's a different story. Short here. See, last call is still short. Still short. Still short. This is just went short. Went short, long, short. And this one is a short from here. So, and on the upside, now, Peter uses this. Peter Cook, my chief moderator in the NQ. He uses this often. Actually, this is his code. He sent it to me, and we programmed it here. So it's drawing the line. Okay, that's the last line. That's what it has it drawn. You see a -9. Yeah. He has to close the trade before he can draw it. Doesn't know what termination is. Okay. He likes the long side only. I like to see both. But long or short, that'd be pretty decent. Not bad. The fact that the problem is that we're still short, all of them. So I don't think we've seen the low. That's my 2 cents, my 2 shekels, if you will. Yeah. All right. Now, PMT. We're a little bit underwater because of theta, but we'll see if we can roll it out. And today we got very lucky. Today was a big help. I was depressed yesterday, but that's just what happens when you have you're responsible for a lot of people and something goes wrong. You say, "What do I do now?" Okay, there we go. Here's the results. Yeah. Now, this is not final. Look at the timestamp on it. I got it updated, but it's as of 218. We have recovered somewhat, and that's what S&P is. Buy and hold. If you took our signals, so it's not all of S&P because it's anchored. When I go long, what was it? S&P anchors what? When I covered, what did S&P do? Same thing on the short side. Okay, this is not all of S&P, but if you came in at the same time, the current value is your return. So if you had come in December 14, that's when we started this. And it's our benchmark, because we have not changed anything. Except that we added more rows because we went up in the return. If you came up, if you entered with us at 1114, you would be at 80% up since November of 18, which was 14, which is 8 years ago. So you made 10% a year. That's what S&P has done. If you went with our system, the same period, it's at 20%. We beat that one. How much? 120. That's our spread. Again, I challenge you to go to Morningstar, find anybody who's done whatever that 120 is divided by 8. What's the math there? Who's good with math here? Dennis, you're good with math, aren't you? So it's 120 divided by 8. It's 15%. Find somebody who's done 8 years in a row, 15% return. If you find it, I'll change it. I'm saying Morningstar. I'm not talking about the hedge funds. Because if you bring hedge funds in, they'll say options. This is just cash on cash. I'm talking about cash on cash. You bring anybody who's done that, 15% is good, just good. What, Dennis? What they're feeding you? What do you mean just good? Every year, talking about cash on cash. Remember, this is SPY. 500 names in there. Yeah. Maybe we gotta get you a glass of wine. How about some vino? Exactly. Most managers would die for that. Exactly. Yes. Dennis recovered before we had to go over there and give him a syringe of vino. Yeah, there you go. Yeah. Yeah, if they do that, if they could do that, I'd change my last name. So, now, this is cash on cash. No, it doesn't include the options. Also, it doesn't include some losses on the options. I'm going to be wrong. Like we will go underwater. But all in all, here's the thing. Because you have a stops, your losses on options are what I call defined risk. When they go, they go. It's a missile. But this is just cash on cash. Yeah. So now you're going to go and see people like Soros or Julian Robertson, he just passed away. I've done better than that. They're more like a 19%. But they're using futures. Well, of course, you have to respect. They're talking about big money. Big money. Running big money is totally different. When that your chest pounds, and I'm a small guy. When I'm trading, let's say 4 accounts, 35 contracts in each. How much is that in Qs? Let's take a example. 4 times, let's say 35. I don't want to give account numbers or size, but just roughly. Something that's 148 Q contracts. So when you pull the trigger, it's 560,000 on the margin money. It's going to make your heart come out of the chest and go back in on every beat. Yes. Well, the reason there's that we broke the covenant of net save with net savers. Yeah, he's saying old maximum was 7% bonds and forget risk in the market. I agree with you, but because they couldn't finance the debt, they had to push the rates down. I mean, the biggest problem we're gonna have right now in our debt is gonna be the interest expense, and they gotta stop it. This is gonna explode. Remember, you have to borrow to pay that too. We could be near a tipping point, right? So they gotta bring this down. When you do that, what happens to net savers? Folks down here. I mean, and so or those who last year they said, let's go buy some bonds. We need some we don't want to be in the market. Let's buy some bonds. If you had anything less than 5 years, let's say 2-year maturity, you can't cash out now. You gotta hold on. If you bought a 30-year because the rate was high, you can't afford holding it 30. Yeah, you might not be around 30 years from now. Yeah. If you want to cash out now, they can send you, maybe 60 cents, 65 cents on the dollar. Just the way the discounting of a bond goes. Remember, the smartest guys in the room are the bond traders. It's not the stocks guy. It's not the cowboys. Why? You also have big responsibility. Bet sizes are so huge. Largest funds are always mutual bonds. Yes. Well, the problem is the ability of, but we had negative rates here too. I like to see positive rates. It's a sign of a good economy when you have positive rates. That means there's a real cost for borrowing. Instead, we're giving money away. That's not very conservative thought process, and it will get us into trouble, as it has recently. But I don't want to get into politics. It's not really a politics issue. It's really fiscal policy. We're spending too much money. Yeah. All right. Let's get to this last piece of the puzzle, and then I'll take your questions. Okay. Murray, we have a divergence, Murray, here too. I don't know how many divergences you need. I don't need too many, but I want non-correlated divergence. This is advanced decline of, not advanced decline, there's a number of issues over 200-day moving average. So it's a scoring indicator, but we have a nice divergence here on this one. I wouldn't go back that far. Here's the reason. To me, too far back on the bullish divergence or bearish divergence is meaningless. So if you look at it here, we're a little bit lower, a little bit higher at the end. That's where we are now. Okay. But I was just considering this area. And of course, we reversed before getting really, really bad. Like December of 2018, Christmas Eve, or March 2020, which was March, the spring equinox. With that said, I think probably a 50-50 chance of uh, having a slow, gradual up. But first, I think we're going to go sideways. So if you have some positions and options, watch your theta decay. That's crucial. All right. Um, Also, I have to reduce a little bit my time involvements because I have some large projects coming. But just rest assured, if we do anything, we'll give you 6 months to a year advance notice. Of some things we have to discontinue. We just can't be able. We can't because the ORB is taking so much of our attention. At 80% a month return, what else you want to be somewhere else? So, but most likely I would do. I mean, one of them could be PMT. One of them most likely would be options. We reduce it. We may just go to a basic PMT or no PMT, but just do the webinars like every 2 weeks. I just cannot concentrate because the future side is huge, huge, huge. And at 80% a month, I have no choice. They're throwing money at me of large size. Don't want to close the chat rooms, but I'm going to reduce some. I have no time for myself. It just completely. It's a dream that you have to happen, and it's a very naive dream. You don't realize what the pressure this puts on you under. So I got to come to some terms with that. I also need to get an office, and I need to get a Genrec out there to protect what we're trying to do. So it's a long journey, but I will assure all of you, before we get there, we'll give you plenty of advice in terms of notice. I'm saying that advice, notice what we got to do. I just got to get my footprint lower because I just have a lot of obligations. Problem is success, and money brings money, and just it cycles up. Or maybe at one point, ultimately, we'll turn into a club. That is no more product page. Those who are in, they stay. We won't take any new people in. Why? Because if I'm trying to wind it down, let's say I'm trying to wind it down in 3 years, I got to do it slowly. So, but and of course, I got to stay these rates. If the systems get into a whoosh like it did in July, that game plan is not going to work. But over time, I've got a little bit lower my exposure time wise because it's sure taking a load on me, and we're just too busy. We're just way too busy. I still have stuff that I've not processed for like last Thursday or Friday. So for people coming in trying to get things done, trying to get involved. So and that's also I'm saying that because also I didn't plan how to exit. I didn't want to plan to exit the trade. That trade was out this late. Now some of you get out. I know that. My cousin wrote to me and says, "Farry, I got on PMT." I said, "Fine," because it was close enough. That was his say. Close enough my target. I use my common sense and I figure with the hurricane and so forth, what you're doing, you're busy. And I understand that. Anyhow, we do have one trade up. Do not get into a trade that's existing. We say that to the option people at PMT. If you're coming new PMT, just read the bribe. Listen to the video. Wait at least to see one cycle, and then you can come in. So watch the video, and we're still in this trade. Okay. Can we go back to 38.30? Probably. What's our expiration? We have time. We have another week left. So I may have to get these longer. That means we have to pay more premium. Or not have it, just shut it down. Yeah. So I mean, it was a great 8-year run, obviously. But this came out of nowhere, this ORB. And look what's done. I mean, we're getting exposed to other FCMs, future commodity merchants, and we're getting overwhelmed. So, and it's like what do you call it? It's like let me tell you what it is. Hold on, let me see how this. And with that, I'll close because I gotta get some work done. Okay, Murray, what happened? Come on. Come on. Timer. Come on. Where is it? I don't have it here. Oh, there we go. It's like this. When you get to this level, you have no control anymore. Hold on. Why is this thing giving me a hard time? Okay, hold on. Oh. No, fit. No, there we go. Once you get this level, you see that spread? It's out of control. You can't do anything about it. It's called greed, and I'm a legal drug pusher. Think about it. Money is the biggest drug out there. Once you get it under your skin, you want more. So I gotta react to it. So, also, I'm finding down here also, whatever it's worth. Let me share that with you. I'm finding down here that retail is having a lot of trouble here. I want to lower my retail exposure or my footprint. I'm seeing some wild trading. It turns your stomach. Sometimes they pull it off and they're lucky. Most of the time, they were sent through the meat grinder. So, I had a case this morning. I looked at it. It was just sad. It was really, really sad. Um, so what I'm doing myself, wow, dog, I'm trading small. I'm trading small. Why? Well, we all have a boss. Mine is Admiral Tico. You're looking at it. I follow his instructions. And Daddy, I won my tomahawks. He likes tomahawk from seat to table. Now remember, he's a recovering Trumpkin. He goes there. We don't stay very long because that's like Trumpkin land over there. So I said, okay. So I get his tomahawks there. But tomahawks are not cheap. And so I got to be a little bit cautious. I can't be a cowboy I wanted to be. So that's where we are. Most likely, I will not take any new clients for money management because of what I have. I want to keep. I want to do a better job. I think we're going to be at challenging times. I don't think this is not a V bottom. I don't think you're going to throw a switch. I think the next 3 to 6 months. Remember, think of it this way. I think where we are now is like December of 2008. We weren't done until another 90 days for the low, and then the highs came in. I think we're just beginning to see some vibrations, and I wish we'd have it faster. One of the things I like to see is to get a flush, but to get to the flush, this got to go up a lot higher. Let's do this, and then let's do the. I want to show a shock wave. Hold on. I like to see this hit in this range up here between 60 and 80, but quickly, not drip. Then you have the flush. Do I think what's his name? Diamond Jamie of JPM is right? I don't know. He had, and last time I checked, he wasn't on the cover of what do you call it? Time of Digest. But I won't mention it, but there was a comment that he gave me on that, but we'll not go there. A few years back in Northwestern, in Chicago, Northeast, what was it? Northwestern, Evanston, yeah. But I think we need a shockwave to clean this up. There's some excesses here, and I don't think the Fed will slow down here by much. I think we're going to still looking at 50%, 50 basis points, or maybe 75 still. Why? There's no capitulation. They haven't been shocked yet, and today was surprise. But if the credit facilities freeze, game is over for Jerry, and it's going to be a tough one for him because if we ease up, the inflation will get even bigger. Then he has to tighten up more. They're in a bad spot. Why? Look what we have done last 10, 15 years to the debt. Just spend. I'm not taking sides. I'm not saying was it this side or that side. They're all equally guilty. If you want to categorize them your way, fine. The fact is, we allowed them to go there. Yeah. We should kick them all out of Washington. They're all corrupt. Look where we are. And the average guy, you and I will survive. We're in an asset arbitrage. But average person out there will try and go to school now, or just got married, having a single for his first home, these are going to be tough times for a while. The complaint was that last 15 years, the middle class did not have a raise. I got news for you. Probably won't see anything for a while. Yeah. Because, yes, they got their raise now, right? But they got inflation. So what did they get? We need positive rates for a while. Okay? That means the treasuries will be above the inflation. That's going to be that. No, nobody got a stomach to take the treasuries and go there. Okay, so we have to try to keep this level until the CPI and PPI drops. Good luck. Yeah. And one area to watch is interest expense of the budget. Yeah, that's bad. Any questions for me? Ani, I don't know. Good comment, but I don't know. Again, I don't think. I watch. Yeah. I mean, I threw the books out of the window in Chicago. And I think I did a little studying, right? A little bit. I wouldn't be here if I had not done that. But I went back to the old saying that trade what you see, not what you take. Get case in point, the person I was talking to about earlier today. Just sad. Totally decimated. Remember, if you're down, I see on Mike, how are you? If you're down, let's say you're down 30%, it takes 50. If you're down 33%, it takes 50% to come back. Yeah, it's not easy, and the math is not going to work. Why? You're frozen. Yeah. So anyhow, that's why I like low drawdowns. If I hit a drawdown, I stop because I know mathematically I can't come back. You keep the drawdown big, you're never going to come back, and you've damaged somebody else. Yeah. Keep your drawdowns small. If it hits it, percentage-wise, hit the Uber. It's not for you. It's not for you. Try Uber. Any comments? Any questions for me, please? I gotta get some work done. Remember, I got an I-9 that's down, as I mentioned on Twitter. Make sure you cover us. Follow us on Twitter. I'm sorry. Remember, in emergencies, the best way. Those of you in the elite package, make sure you follow us on this package, HBDS. But this is done by invitation only. These are packages. But Tico or me, you can follow. If we have an issue, that's where we hit. Why? Faster than anything else. For email. Just I can do it from my phone and goes to everybody. So. Ani, I don't know if I'm right, but recent history has been trending that way. That's all. Yeah. And when you say right or wrong, it should be a sample size. Sample size. Midterms, I don't know. I'm not in the politics business. If I read the data right, it'll be a sweep. Yeah, it'll be a reckoning for the GOP. Simple. Roe versus Wade and Trump. And bad candidates. Mitch said it. He said this is one of the worst candidates we have. I'm a Republican, but I'm not a Trump kid. I don't. I do believe in America first, but not lying to people. So there's a fallback on that. That's going to be. I mean, look at how many soccer moms from suburbs signed up to vote Republican, to vote as a Democrat. Yeah. So I think if anybody's smart on the right side of the ledger, it's going to be Mitch McConnell. And he's worried. He's saying they're bad sort of candidates. Now, of course, you can't pick candidates because they're on TV. How about their IQ? Yeah, it's just like our immigration. That's messed up too. Our immigration should be like Canada, it should be based on your abilities to come in, not because you're a prosecutor. How are you going to prove that? There's no documentation, And what's going to happen to us? How are we going to carry that? Yeah, it's ridiculous. Yeah. And I wouldn't, on immigration, I wouldn't let them come in. I would deport them. We would tell them that if you come in here, we catch you, we'll deport you, but we put back your application for 1 year. And everybody has to wait in Mexico. Can't come in. It's going to be tough. Remember, I lived in LA. I had enough of them. So that's sad, but that's how it is. Now, if you go to what Canada does, you stay in your own country, you apply, you show your credentials, and you're on the list of what they want. Let's say engineers, doctors, and so forth. You come in. That's smart. Yeah, there's so much unskilled labor we need. More than that, no. The problem is the businesses are helping that. Look at Trump. Look at how many immigrants he had in what do you call it? And Doral and at Mar-a-Lago. So that's all hypocrisy. Yeah. We got to be truthful with each other. We're not. Anyhow, I got to run. Any other questions for me? By the way, and Anita, on midterms, you're going to see the market react early. Thanks, Dennis. The market will react. The market would say what's going on. And that's a good consensus. I'd rather the market tell me than for me what I think. Again, goes back to what I said earlier. See how the market is talking to you rather than you trying to talk to the market. Because I figured a long time ago, I'm not that smart. Yeah. So best is pause, look at the data versus expectation, execute. And tight stops. Good indicators are cool. No, good. But you've seen what our chat rooms does, right? So I gotta run. Thank you all. Good night. As always, this will be posted. Let me include that here too. Always posted on our YouTube channel. Best is to subscribe over there. You enter from here our videos, and it shows up. Boom, boom, boom. Okay. So it takes us about half an hour from here. I have some work to do, but I'll do it in the background while I'm doing it. Mr. Petrucci, always a pleasure, sir. Maybe when I'm in town next time, Mr. Petrucci, we can have a cappuccino. The idea. All right, sir. All the best. I'm trying to be truthful. I'm trying not to take sides. I'm trying to see what's wrong overall. This is not a country I came in for 50 years ago. That's dramatically changed. And I'm really worried about our debt. I said it in 2013 or 14. I think Dennis was there. I was in Chicago. I said, look at the debt versus demographics. 15 to 16, something is going to happen. Look what happened. Debt is an issue. And of course, demographics, it creates grievances. You cross those two, time-wise, it looked 15 to 16. Look where we are. And of course, Comrade Putin is not helping. But I'm hoping that somebody at Kremlin has enough guts to put him out of his miseries. It takes a couple of bullets. So, but he's got to be willing to die too. Yeah. You got to do it for the country, for Russia, not for us, for them, but also for the world, because he's just creating havoc. You know, so he will. The way I look at him, he's not doing well, and he's not taking any questions. It's just beginning of the fall, and just a matter of time. He's totally different than the guy you saw at Crawford, Texas, when George W. said, "I look at his eyes and I see his soul." Yeah, he has no soul. He worked for KGB and addressed him. So we'll see. He seduced all of us. Yeah, Germany. Look at Germany. Look at England. Look at us. We extend them a lot of credit, all that. But back in his mind, he wanted to rebuild the old glory of Russia. So. Exactly. He was a totally different person. Yeah. But he seduced us. It's like Admiral Tico. When he wants that tomahawk, you don't know what a nice blonde he becomes. Very, very conformative, very listening, very sweet. Once he gets his tomahawk, he's a different dog. Welcome to America. Exactly. See you guys. See you next week. Thanks.